Welcome to KNAV Insights, a podcast series where we bring together thought leaders, practitioners, and subject matter experts to unpack the most significant regulatory, financial, and business developments shaping India and the world. I'm your host, Kostubh, and today we have a conversation that I'm genuinely excited about. One that affects virtually every taxpayer, every business, and every tax professional in India. As you may well know, today, April 1, 2026, marks an important milestone in India's tax landscape. After more than 6 decades, the Income Tax Act of 1961 has been replaced by the new Income Tax Act 2025. To help us understand what this means for individuals, for businesses, for multinationals, and for the broader economy, we have with us today a true expert in this field, Mr. Uday Ved. Uday, let's start with the big picture. India has witnessed a wave of sweeping regulatory reforms over the last decade or so. The Companies Act of 2013, the Base Erosion and Profit Sharing Framework under BEPS, and the Global Tax Agenda under Pillar 1 and 2, the Goods and Services Taxes Act effective from July 1, 2017, and now the new Income Tax Act 2025. This is a remarkable span of change in a relatively short period of time. In your view, what are the key objectives driving these regulatory overhauls, and how do they collectively impact the Indian economy?
So thank you, Kostubh, for having me on the show here. As you rightly said, lots of regulatory changes which have happened in last 1 decade in a short period of time, right from Companies Act to GST, to the Pillar 1, Pillar 2, and now new Income Tax Act. The whole objective is that India is integrated into the world economy over last 3 decades or so, and foreign investment, outbound investment is happening. It's becoming more global. And the laws and regulations which were there in the past were at that point of time, say Companies Act of 1956, which was like 70 years back, right? It got aligned with 2013. So as on today, what kind of changes? Say scales have gone up, stakes have gone up. So those kind of regulatory changes came to align with the business realities of today, be it a pure domestic kind of a transaction or an arrangement, or even a global business which might be happening. So in that scale, the Companies Act of 2013 was a starting point. Then there are lots of tax changes, international tax changes which happened. India was a very signatory to that, and also quite an active member. The BEPS that you mentioned, Pillar 1, Pillar 2, transfer pricing related changes, and now has been the overall of the new Income Tax Act. So current Income Tax Act is that of 1961. Lots of changes have happened over last 70, 75 years. Things have changed a lot. So the whole objective was to rehaul the Income Tax Act and bring it in line with the realities today, so that it is aligned to businesses, also aligned to the global best practices. I think that's been a key objective of doing all these regulatory changes, and particularly the one that we want to focus today is the new Income Tax Act of 2025.
Thank you, Uday. That context is really helpful. Now let's focus specifically on the new Income Tax Act 2025. It replaces the Income Tax Act of 1961 and has come into effect from today, which is April 1st, 2026. What, in your views, was the fundamental rationale for undertaking such a massive legislative overhaul, and what is the new act fundamentally trying to achieve?
So it's, as I said, 1961, it's almost 65-year-old regulation. To bring it in line with realities today, the Income Tax Act of 1961 had something like 800 plus sections. So the changes have happened over a period of time. It's very difficult to read, interpret, leading to a lot of litigation, right? So the whole objective of this entire overhaul of the Income Tax Act of 2025 is to make the simplification in the tax law, easy to read, ease of doing business, rationalize the administration, reduce litigation, and there are lots of changes which have become redundant. So they have been regrouped, and the entire new act is more a simplification, which hopefully leads to the reduction in the tax litigation.
Got it.
So, but by the way, the changes which have happened are more on the simplification and language changes. Not many large policy changes have affected over a period of time. Okay, the act does not make the policy changes, and you have Finance Act every year. Right now, we had Finance Bill of 2026 on February 1, 2026, which has now become the law. So all policy-related changes still gets done every year to the union budget. So this is more of simplification exercise.
Thank you, Uday. Wonderful. That's a very detailed understanding. Thank you for your views on that. Now, for our listeners who want to really understand the substance of this new law, what are some of the key attributes and structural features of Income Tax Act 2025 that distinguishes it from the old regime?
So as I mentioned, there are not any significant policy changes. It's more regrouping, making it user-friendly, reading it, easy reading. Interpretation becomes easier. Okay. As I mentioned, there were 819 sections in the old Income Tax Act of 1961, which has been reduced to 536, some 35% reduction. In terms of words, there were some 500,000 plus words, which have been reduced by almost half the size. Okay, there were some 511 rules, which have been reduced to 333. Then there are various forms that you need to file, return forms and various other exercises. 399 forms. Again, those have been reduced to 190. I'm just trying to give this statistics or figure just to give you the context that it has become much more simpler than what it was before. Having said that, the entire construct of the act, as I said, the policy remains the same.
Great. Thank you for your understanding on that. Now, there is one more thing I would like to touch upon. So, the Ministry of Finance and the CBDT have issued a very detailed set of FAQs running to close to 99 pages, I believe, to explain the interplay between the old Income Tax Act 1961 and the new Act 2025, and to address transition-related issues. That is quite an extraordinary step by government. Can you explain the salient features of these FAQs?
So it is interesting that it's a 99-page document, got into some kind of 10 topics as the document talks about it. Right from the general philosophy, what's the philosophy behind this entire change in the act, to entire transition issues, return filing, TDS payments, okay, assessments, reassessments. So various topics have been specified and how it will work under the old Act of 61 and how it will work under the new Act of 2025. As an example, any transaction or anything which happened yesterday, as an example, on 31st March 2026, the old Act will apply practically. And from today, from 1st April 2026, the new Act will apply. As I said, there are no policy changes, but the transactions will be governed under the respective tax laws, and both the act will in that sense run parallel over a period of time, because the returns which would have been filed for say March 25 or now March 26, which has happened, the returns will be for March 26 will be filed this year, right, in the year where the new law has come into the picture. But the old act will prevail over to do that. So cutoff date is 1st April 2026. Before that, the old act applies, and from today, 1/4/2026, the new act applies.
Okay. Let's get into more details of what the FAQs cover in terms of specific transition issues. It is understood that the FAQs address areas such as return filing, TDS payments, assessments and appeals, tax audits, transfer pricing and APAs, non-resident Indians and their residential status, among the other issues. Can you walk us through how these specific areas are dealt with and how they impact the assessees and taxpayers?
So just before getting into these specifics, there are two aspects in my view which are relevant. One is that under the old law till yesterday, as I said, right, till 31st March of 2026, the concept of income tax is a previous year, which runs from April 1 to March 31, and then relevant to that is assessment year. So you always have two aspects to be spoken. Previous year, financial year 25-26, and assessment year 2026-27. Now both have been now merged from April 1, 2026, and now it is called tax year. There's only one standard aspect. Rather than referring to previous year and assessment year, from financial year 26-27, it will be called tax year. So there's one change. It will become easier for us to understand. Otherwise, that was creating a lot of confusion over a period of time. Of course, tax professionals like us got used to it over a period of time. It was creating a lot of confusion and litigation sometimes around that. And the second part, because the law has been repealed, Income Tax Act of 1961 has been repealed, there is specific section 536 in the Income Tax Act of 2025, which talks of the repeal and the entire transition issues, which is important. It's not that the act has been repealed, but all the provisions, all the circulars, all litigation, all filings, reassessment, which were done or it would be done under the old law will continue. This is a transition provision, which is a very well drafted transition provision. And while the FAQs have specifically tried to address, as I said, over a 99-page document, it specifically mentions a caveat that, see, this is what they have tried to anticipate. There could be something which may be even beyond, which is not covered in the FAQs. So the actual law, Income Tax Act and the rules will apply. This is not, a final. FAQs are more guidance in that sense. And something not covered maybe will be covered under the Indian Contract Act. But there has been a smooth transition which has been tried to be done under the FAQs to read with the Income Tax Act. I think that should bring a lot of clarity. There will be transition issues, I can tell you, in terms of withholding tax provision, right? TDS obligations, whether the old law will apply, new law will apply. And now, interestingly, India has really gone very tax savvy as far as income tax is concerned. Right? So everything is online. So the FAQs also mention specifically that please try and put the relevant year and go to the relevant act. Otherwise, there could be a mismatch in terms of the say TDS credits. If you put a wrong year, there could be a mismatch in the TDS credit, which may have to be rectified later and whatnot. So they try to give as much clarity as possible.
Got it. Thank you so much for such a detailed understanding on this matter. So now, in parallel with the new act, the government has also notified the new income tax rules 2026. How do these rules interact with how do these rules interact with and complement the Income Tax Act 2025, and what is the significance of the new rules for taxpayers?
So like we have an Act of Income Tax Act 1961, which gives the policy related provisions, right? The implementation is done through rules, which is an income tax rule of 1962. So when we have a new Act of Income Tax 25, the new rules of Income Tax Rules 2026 have also been notified. Essentially, the rules as under the 62 rules have been notified also in the 2026 rules. Yeah, and it's more simplification in the language like the Act. The rules also follow something similar, more detailed explanations and everything, but not any significant change as far as rules are concerned. It will interplace on how the Income Tax Act of 2025 will have to be read and implemented together with the income tax rules of 2026. Let me give you one example there. Say when there is a restructuring and there is a slump sale of business which happens. So slum sale under the old act was a different section. Computation was different. Something similar has been also implemented in the new rules also here, right? And then there is a permanent account number. If you already have a permanent account number, it will continue. But somebody wants to apply for the fresh permanent account number today or afterwards, will be governed under the Income Tax Act of 2025 together with the specific rules. So they have notified act, they have notified rules, they have notified various forms. And that's, I think, a credit to the government and the Central Board of Direct Taxes, that effective today when the new law is in force, not only act, but the rules, FAQs, forms, everything has been notified. And this is all on the website, already on the website of the Income Tax Department.
Okay, great. Thank you so much for your understanding of this point as well. I move to the next question. So the government and the CBDT have updated the income tax website to provide detailed resources on both the old and the new act. In this complex transition phase, how taxpayers, tax advisors, and corporates leverage the income tax website to read, interpret, and apply these regulations effectively.
So I'm reminded when Companies Act of 2013 came into the picture from 1956. Everything was manual, physical, right? And one had to go through various sections and rules and regulation. It took quite some time. As an example, the mergers and demergers was always under 391 to 394 of Companies Act 56. It became 230 to 234 of Companies Act 2013. It took me quite some time to remember the new section. When it comes to this income tax, because the tax department is so tax savvy, everything is on the website today. So you can go to the very user friendly. You can go and put a particular section of the Income Tax Act, and there is a comparable section of the new Income Tax Act which is applicable. Same way for rules. So there is also a very user friendly part. Even the forms have been notified. So you are able to interplay between the Income Tax Act of 61 and 2025 by just going to the website. And I think I'm not a tax savvy person, but I find it still very user friendly in terms of the use. So that I think will really help in this tech area when everything is faceless, right? Filing is online, assessments are faceless, appeals are faceless. So this user guide which has been put in the website will be very, very helpful.
Correct. We are coming to an end of our conversation today, and what a rich conversation it has been. A closing thought: what would you most like your audience, our listeners, who span taxpayers, corporate finance professionals, tax advisors, and the broader business community to take away from this discussion?
No, I think the objective of the new act is to make things very simple, reduce litigation, and hopefully we are seeing that also over a period of time. And transition will have its own set of challenges, right? But as I said, the tech part is really helping. It'll take some time for people to understand. But the rules and regulations, including the new Income Tax Act of 2025, is in line with the realities today and the global best practices. So it takes into consideration how the globally the rules work, or and how India is really integrated in that respect. So, and everything is available today. And I just went to the website in the morning, and it says updated as on 31st March 2026. So it also shows that it is like online. We are seeing the RBI website. It keeps on amending from time to time, and hopefully income tax website will also keep on amending. So use of the technology, the various aspects, and should make life easier for corporates. The obligations of employer should become easier for the compliance. Taxpayers should be able to do things much faster and focus more on the business, right? And reduce the litigation. So hopefully, all in all, I think good experience, I would say.
This has been an extraordinarily insightful conversation, I must say. The depth of change we are talking about, the scope of the transition, and the practical guidance you have shared, I think this will be extremely valuable for our listeners. Thank you so much for joining us on the KNAV Insights today.
Thank you.
To our listeners, thank you for tuning into KNAV Insights. If you found this episode valuable, please share it with your colleagues and professional network. For more information on KNAV's services, please visit us at www.knavcpa.com. Until next time, stay informed, stay compliant, and stay ahead.